Thanks very much for your time. I'm going to provide a brief update on Murray Income and some of the transactions within the portfolio over the last quarter or so. Firstly, thinking about the composition of the portfolio. At the moment, we have 55 holdings. Around 3/4 of the portfolio is invested in large cap companies and 1/4 in mid cap companies. And 16% of the portfolio is invested in overseas listed companies, which is helpful in terms of finding interesting companies that aren't available to investors solely looking at the UK. And I'll provide an example of a new holding that fits that bill in a moment. The largest 4 holdings represent about 20% of the portfolio, and these are 4 great quality businesses: AstraZeneca, Diageo, Unilever, and RELX. There have been some changes to the portfolio I'd like to mention. We sold the holding in Aviva following its takeover by Schneider Electric. And we also sold 3 small holdings in property-related companies, Assura, Walking Jones, and Unite, given concerns over the impact of higher interest rates on those companies. The proceeds allowed us to improve the overall quality of the portfolio with increases to the holdings of London Stock Exchange, RELX, and Sage. We also added 2 new holdings, LVMH and Games Workshop. LVMH is the Paris-listed luxury goods company which owns brands such as Louis Vuitton, Tiffany, Fendi, Glenmorangie, and Bulgari. It's a segment of the market that's difficult to access through a UK-listed company, and we didn't want to miss out on a company with fantastic brands, high margins, great pricing power, and strong long-term growth opportunities. And the second new holding is Games Workshop, the unique mid-cap tabletop fantasy war game company, which has very strong intellectual property through its Warhammer series. There's lots of scope to grow sales overseas, which should be helped by a series on Amazon TV, which was announced after our purchase of the shares. It's a company with really high customer loyalty, no debt, and high levels of profitability. Moving on to performance, nothing particularly significant to mention, just that the NAV and share price performance has broadly been in line with the index over the last few months, which represents a very healthy increase in absolute terms. So in summary, we're very much sticking to our knitting, which is encapsulated in the belief that in order for a company to grow its dividend, it needs to grow its earnings, and over the long term, good quality companies are best placed to do that. So for us, it's really about maintaining a diversified portfolio of high quality companies that can do well over the long term.